right, good evening. Let's get started with GDXY. All right. So what happened with GDX and GDXY? So we were up 0.1%, or sorry, 36.10 to 36.11. So we're up a penny, which is 0.03% on GDX, and on our YIELDMAX fund, GDXY, we were up 0.21. We were up 4 cents, 1874 to 1878. So a couple of things happened here. No new shares were bought, but they did kind of a major roll. And let me show you what I mean by that. So we had been in a 38 synthetic, okay? And that 38 had a series of plays, and they moved to, whoops, I didn't label these correctly. This one is now the 36. Sorry, guys. Whenever they roll, you basically have to add something. So this 38.1 is now a 36. SYN 36. Okay. That'll make it a little easier. So on the 38 that we rolled out of, and one of the issues is I think they see some bullishness coming. They've overrun their weekly by a little bit. They're 36.11 on a 36.10 on a 36, and that's where their weeklies were. So they had been at a 38. I think they wanted to get a little more aggressive, and instead of just writing these down below, they wanted to write where they were. So a move up, they would make good money on the synthetic. So that's what they did. And so whenever you then buy it back, so here's the sheet, which will help you a little. You see here some GDX. You know, they're putting on these sheets various trades, but you see on the GDX, they sold instead of bought the call, and bought to close instead of sold to get out of the 38. Same quantity, right? And that cost them a lot of money. They're selling it for 17 cents and buying it to close. And then when they put a new one on where they're slightly in the money above 36, they buy for 153 and sell for 120. So that's what this scenario does. So it takes some cash out of there, but I'm not in the least bit concerned because I knew they were going to have to roll. So in this situation, they wanted to do it early, right? So now we're in this mode where this 36 is setting out at 816, right? So we have runway and headroom here to do a better job. Again, a lot of little housekeeping when these things happen to catch up with what is reality. So here's the second trade. Let's go over this first one again. So again, it cost them over 400,000. We had a positive number here, which is really a negative number. We had a gain. So now by spending a lot more, right, buying this back and selling this, there's like a little over 400,000. So when we took the money away we had, we now have a loss in July on the synthetic, and then we have a tiny more loss in the new one, right? So this is our new 36, and we put all 21.85. So we bought a call for $1.53, sold a call for $1.22 times 21.85 contracts, and every contract is 100 shares. So the net difference between them is 67,000. So when we add that number as well, I didn't bring it down here, but I did bring it into the calculation up there. Let me do that right now for you guys. So again, it's just the accounting, but this accounting is kind of vital because it tells us so much about where we stand with actual cash, right? So when I go to the payouts, this is the two of them together. And then this short call income, because we didn't sell any shorts, right? We simply, now we would have, sorry, we didn't sell any calls. We would have had people bought into the fund and we had excess cash, but we simply got out of the 38s and went into the 36s. So we had like $1.49. So it wipes that money out, but it sets us up if we go bullish so that our synthetic is in a really nice position. And then look at our holdings. So for once, we have a positive number now in this 36. So now our synthetic, with any move up at all, starts really making us money. We are at $1.53, and the put is $1.20. You always want your put to go to zero and be cheaper. Sorry, my throat was getting dry. Okay, so that 73 is reflected here in our synthetic history. These numbers really aren't relevant because they were at the 38 strike, right? And we're now at the 36. So let's look at what's been collected. So in this one, we're still positive, the smaller one, unfortunately. You know, we sold that for 89.30. We could buy it back for 3,800. The problem with this one is, and it's a 37, we're in the money 11 cents. And I was telling you guys yesterday, we were only 10 cents. So technically, if we did nothing but stay at 11 cents, this is going to be 12 or 13. And we had sold that for 35. So we really have some profit room there. Of course, we're going to have to spend some to buy it back. So we're not going to keep the whole 77,000 unless it goes right back to 36. But honestly, I'm pretty bullish in this time frame because we may not do it this week, but week after next, we start getting earnings reports from some of the major miners. I think Newmont's on schedule for somewhere around the 18th. I don't have the exact date in front of me, but I expect a really blowout on earnings from Newmont, followed by some of the other top 10 holdings going into the first week of August. So I'm glad they rolled. Yeah, right now we have 18 cents here and we have a 76-cent loss, but not in the least worried about that. Here's a recap of the weekly. Nothing's really changed in terms of the quantity, right? Because we didn't put any additional ones. And technically, we're 28, of 1/10 or of 1% over, right? We're in the money. So we wrote a 36 and we're trading at, I think this one is 11 now. Yeah, 36.11. And this one is now 78. Sorry, guys. 42. Yeah, 1878. But look at this, right? The very fact that we're setting here, above this channel. So again, we could pull back on any day, but we also could run up to 37 or 38 at a moment's notice. So I don't really see an issue with that. These parallel lines like that, where they form a resistance, once you break above them, then that's a positive sign. You want to get a daily confirmation. Well, we've had 2 or 3 or 4 daily confirmations now. So I'm really, really bullish on that. And at any point we could break out. Typically there's a catalyst. So that catalyst may in fact just be the first earnings out of one of the major mining companies in the GDX. Let's look at more in the holdings. So again, we see this. We closed at 1878 and fair value is now projecting at 1875. So really close there. No shares added. We've collected 37%. Well, actually, I take it back. We're minus because look at this. This one we've captured 56%, but it's so small a contracts, we're behind on this guy, right? Because it's a 36. But I explained to realistically, come this Friday, this is only 11 cents based on the current price. Right now it's 52.5, which means we sold it at 27 or something. So, I'm pretty optimistic. Although we could run right by this, but guess what? We make it all over on the synthetic side. But again, I hate losing weeklies, but hopefully these guys understand earnings is coming up, the fund managers. And so this Friday, when we do roll, whether we take a loss or we're still at 36 and we get a gain, they need to get a little more aggressive in how far they go out based on earnings. But, at this point, I'll have confidence in the fund manager. This is a new fund, and they haven't gone through an earnings cycle based on their underlying assets, which are these big large cap gold and silver mining companies. Okay, guys, so let's take a look at payouts and I'll wrap this up. I showed you a glimpse. So nothing's changed, right? I'm very bullish on GDXY. I see a run up into August. I see potentially a pullback, flat in September, and maybe in October we bottom again. And then in the final months and into next year, we run up aggressively in gold. I'm looking at 2,700 to 3,000 gold sometime in the first half of 2025. But listen, at any point, we're 23 something. This thing can turn around and go down to 2,200. I mean, it's just the nature of the beast, and then turn around and take off. So sometimes when the miners start moving, gold can be relatively flat. What's happened before has been the miners are one of the most unloved, hated sectors. That's why I'm so bullish, because gold's gone to an all-time high. It's a little off the all-time high, but these miners are going to have fantastic. And silver looks like it's just ready to go. Once it breaks 33, we're off to the races. I can see $60 and $70 silver the first half of next year. So these silver miners are just going to go nuts. And there are very few pure silver miners. I mean, I'm buying some individual stocks and positions, but I also think an income, right? And if I don't like what I see from the fund managers here, I'll go out and load up on Nugget when I see these running, which is really a 2x on GDX, right? And then there's JNUG, which is a 2x on the more junior and mid cap kind. So I'll share that information with you guys because, listen, an income fund can only give you so much. They give you income. They can do a great job on that, but they can get capped in these bull runs, right? So sometimes it's okay to own a leveraged or own some of the stock. It's harder when you're trying to do that on MicroStrategy and it's a $1,200 to $1,800 stock to get any sufficient quantities. I know you still have the capital, even if you buy one share, you have, so much money in there. But then you can't write covered calls. You can't do a lot of other things unless you have 100 shares. And it's hard to allocate capital when you have 100 shares of an $1,800 stock. Okay, guys, that's what I got for you. Have a great evening and a good trading the rest of this week. I got more videos to do, and I got a surprise video coming out in the next 24 hours. I think you guys are going to like this. Okay, see ya. Bye.